Welcome to the in-depth review of coverage addressing the unique operations of motor carrier, brought to you by the Motor Carriers Insurance Education Foundation. This section is going to be for pollution exposure and coverage. These webinars are not filed for state CE and is a learning opportunity only. If you have any questions, please send us an email to trs@mcief.org and we'll answer the questions later. When I think about pollution, I got a go-to person forever because this is an area that there's needs some more expert people who know more about it than I do. Drew Easton with AmWinds Transportation out in Indianapolis has been that person for me for a long time. Drew, welcome, and tell me a little bit about yourself and your position and what you do in that part of it.
Sure. Thanks, Tommy. And first of all, thanks for being 6 feet away from us. We'll keep socially distant as we go through this presentation. But we are a wholesaler MGA. We have been fortunate to be a program administrator for a couple of different companies for more than 20 years, specializing in environmental transport, as well as working with some wholesale and MGA facilities with other carriers as well, I should say. So we've had a lifelong or career-long expertise with this class of business, and we always enjoy educating those folks that want to learn a little bit more.
And just so you who are listening, who are agents and do not know of Drew, he has always been willing to answer individual questions every now and then, what limit this needs and this kind of stuff, even though he's not writing it. And Drew, I really appreciate you helping the members of the foundation, that part of it. And Drew is also the chairman of our curriculum committee, so he's very active within the foundation, and AmWinds and their support and Drew's support makes the foundation even better. So Drew, we want to thank you for responding to those things.
Anytime, happy to be a part of it.
Now, I did things, I'll go back. Now, there's nobody listening to us that can remember these days, but when I started putting this together, I'm doing this part of it. The pre-1980 policies, and the one thing about the pre-1980 policy, Drew, you do know that Canal and Virginia used this policy up to the middle 2000s.
Yep.
So there was some language like this still in the marketplace up within 10 years ago or so, this part of it here. But covered bodily injury, property damage, and the last line is the important part about pollution part of it, because this is the exclusion G, and they say it's excluded except a sudden accidental. And I don't know, Drew, if you look at the court cases, but that was really misinterpreted, or it was always concerned. What do you mean by sudden and accidental? It cannot leak, but I've had a couple court cases says, well, even though it leaked, it was accidentally leaked. It wasn't intended to. That part. And
indeed, it was rather confusing.
And it went on forever. So ISO made some major changes. The number one change in form policies was done with a series that ISO did in 1980, and they call it the easy to read, and we always put a paraphrase after that, Drew, and hard to understand. They first off they combine auto and PD together in one policy, and now the insurance agreement addresses direct BIPD, but there was no coverage, pollution, cost, and expense, that wording that we have now in it. They did add the exclusion for pollution damage done by any property insurance carrier control. That's the cargo, but that was direct damage. And there was a couple court cases because ISO said they did not cover pollution cleanup, but the court said property damage. Property damage means loss of use of tangible property, direct damage, loss of use of tangible property. And they're saying, how can you use tangible property if you got pollutant in it unless you clean it up? So the courts were saying they told definition of pollution, property damage includes cleanup. I don't know if Drew, if you remember that transition, but that was a lot of study over your own before they then added in the 1980 form this covered pollution cost and expense, which now is the cleanup. And they also added the CA 9948 buyback endorsement at that time frame. So that's a short history where we went from sudden and accidental to try to do direct, but then added the exclusion that caused by cargo, and then we add, which was direct damage, then we add the covered pollution cost and expense, and we then added the buyback endorsement. So this is where we are with coverages right now. And so what we have when you look at the auto liability coverage, we'll pay all sums insured legally must pay as bodily injury, property damage. That's direct damage. Drew, when I teach that, that's like what? Breathing a gas that escapes and getting your lungs for bodily injury, or something escapes and gets into the grass or the creek and kills fish and trees. I consider that property damage done by the pollutant. Is that what you would think in these areas? Or maybe you have one or two more examples that comes up with the direct damage part of it.
Yep, that is correct. If you've got the product itself that has caused harm, you're exactly right. That's going to be the direct damage, typically property damage, but as you also mentioned, bodily injury. If there's some fumes or some sort of inhalant that could be ingested by an individual, that also would be that as well.
Or something that sketch, even oil and all getting somebody's skin could do a rash or things like that. And then the second paragraph is the one that they added. And this says that we'll pay covered pollution costs and expense. And that's the cleanup. So we have two coverages in the current policies: direct damage, doing bodily injury to people, as Drew said, gas, or again, as I pointed out, killing fish or killing trees. And then we have once all the damage is done, now we have to extract that pollutant from the environment. And that's basically where recovered pollution costs and expense becomes so important. And that's it. There will also, and the reason I part this in, Drew, is because as we get into examples of coverages, one of the things that we have to consider, and again, I'd like your input here, we have the right and duty to defend any insured against a suit asking for such damages or covered pollution cost and expense. And the point I'm making here is a lot of times when something escapes, and later we're going to use where you have diesel fuel and oil escape, right now you can't tell what might be covered or not covered, but as long as there's some element, meaning the truck hit something, that's the suit that's going to be filed. And to separate parts of it, we have to defend, do we not, until we're able to separate that kind of stuff and have to start defending, maybe on a reservation of rights letter. But this is where pollution, some of these, where there might not be any coverage, kind of gets overweighted by our duty to defend.
No question about it. That's the promise of any policy we issue on the insurance side, is that duty to defend, to protect our named insured. And in this situation, not only are we doing that, but we want to be thoughtful about those monies that will ultimately be paid for any cleanup or environmental restitution. So we want to control the investigation to understand where that liability exists, where those costs should be associated. And candidly, it gets back to that proximate cause. What was the cause of the damage to the property or to the bodily injury that we're trying to mitigate, remediate, or whatever the case may be? So controlling that conversation, controlling that investigation is paramount to controlling the cost and expense associated with our insurance liability only.
And I know since you sit there and do this on a daily basis, you can come up with some examples, or maybe a lot of examples, but I can't think of many examples involving transportation, trucking, that did not have an element of something that's going to be covered if it's done by a covered auto, meaning the truck ran into something, or they ran into the guardrail, or they turned over on the top of a car. So to me, you always would have to, even though pollutants are part of the damages, there's going to be other things that happen in that crash that would require us to defend the whole thing until we're able to sort it out. And I guess that's your first way you start looking at it, do you not? Then you draft the reservation rights letters if there's some limitations.
Absolutely correct. Yep, we want to identify where that liability exists, and I mentioned proximate cause a moment ago. We want to recognize what the initial event was or incident that caused things to chain react and ultimately end in that release or that bodily injury or whatever the case may be. Most certainly, in the reservation of rights, not used all that often because things typically are fairly clear, and then you're just dealing with percentages of liability. But in situations where there's a true question about causality, the reservation of rights letter is a great protection for the parties involved, not just the insured, but also the motor carrier, so they're aware of how that insurance carrier is investigating the loss.
So we have a direct damage, we have the pollution, covered pollution cost expense, and we have a duty to defend. That's our insuring obligation. That's the insurance policy. The government got involved in this, and again, just real brief. Some of you went through the program already we have and the webinars we have about the motor carrier and the government. But the ICC started in 1935. That's when they gave authority for people to haul processed goods of others in interstate commerce. Pickles, not cucumbers, with the authority cucumbers exempt, pickles being regulated. In case we use that example, Drew, how many people you think know that my father hauled pickles and cucumbers?
Anybody who's ever met you, and then some.
In fact, when ISO introduced the motor carriers form, the example they used was pickles and cucumbers. So that was David how far that goes. For public convenience and necessity, certain items are you can haul certain items over defined routes, and they required a certificate of insurance, which is a 90 filing, and it only required a limit of 300,000. And it was only for those motor carriers who have this authority to haul processed goods of others, not exempt. And in those days, Drew, my father got his authority in about 1975, and there were only about 17,000 people with that authority. The insurance carrier will protect the public if no coverage in the policy to address the damage done in the crash, and that was mainly not listed. Today, there are about 250,000 people with that same authority, so that's how it grew. But this is the point here. The first proof of coverage that the government required was only to people, very limited number of people who were hauling the processed goods of interstate commerce. Then they introduced the Motor Carriers Act of 80. Drew, I consider this as the landmark federal law. Do you also agree with me on this? It changed everything.
We do indeed. In fact, I think it's often referred to as deregulation.
Yeah, and I like to call re-regulation because actually there's more regulation thing. What the deregulation he talked about is the second line here. No longer the authority is no longer exclusive. Because at that point, all you had to pay is $300. Then you could haul general commodities over irregular routes, meaning haul anything, anywhere, even low-grade hazardous, that part of it. And so that was the deregulation, which is re-regulation, but they did add more regulation. They addressed financial responsibility by adding Part 387, the minimum limits of insured responsibility for motor carriers. And this was a new, and so that minimum now was raised from 300,000 to 500,000 for 5 years, and then to the 750,000 that we have now. That was effective January 1st, 1985. That limit was there, and then they added the hazardous limits for people hauling certain hazards. So it went from the $1 million to the $5 million, and this was the big move. Again, Drew, you were not around here, but a lot of insurance carriers had a problem. And this is where the 91X was introduced. And that X that you see versus the 91 is that allows it to be layered. And in those days, we actually had to layer that first layer from 300,000 to 500,000 and then 750 because a lot of insurance companies didn't have reinsurance for over that 300,000. So this was irrespective of the hazmat. So when you see the 91X, that is because the 90 is still available, but 91X allows it to be layered and limited stuff. So that's the big limit part of it. And this is where your business came in, Drew. I know that you weren't there in this time, but now we have to deal with this extra requirement for coverage requiring these higher limits. And so this is what you deal with every day, right, when you talk about hazardous?
Correct. Yep.
Now, who must comply? All for-hire interstate hauling any property, even exempt goods, would have to comply with the minimum financial responsibility requirement. Not a filing, but the minimum financial responsibility requirement. And all motor carriers, including private, if they're hauling something hazardous. So the Motor Carriers Act of 80, other than that, quote, deregulation that Drew and I talked about, raised the limits, introduced higher limits for pollution hauling, made it have financial responsibility for all interstate for-hire motor carriers hauling any property, and for the first time added a private carrier to have to meet minimum financial responsibility, but that was tied to pollution. So all exempt for-hire interstate and all hauling hazardous items, including private, must now meet the minimum levels of financial responsibility. And to meet that, they come up with an endorsement, the MCS 90. Drew, that's the golden grail, is it not? That's what we have to deal with, and what we're concerned about is what that requires us to do.
Absolutely. It is a great resource of information and also spells out responsibilities for all parties involved, including the motor carrier, not just the insurance provider.
And this is, and just so you understand, this is endorsement on the policy. Never call this a filing. It's an endorsement on the policy. It's not sent anywhere, because the only time it's policed is when an officer comes, knocks on your insurer's door and says, I'm here to help you. As a part of that inspection process, they review the insurance coverage needed. And they'll see if there's an endorsement on the policy with the required limits based on what they're hauling. And if the responsibility is not met, they could fine up to, the first number was 10,000 at review. They've now added it to 11,000 per day. That was done about 10 years ago, and it was during an inspection. And so to enforcement here, and the problem is there's a lot of people who aren't hauling, have 18-wheelers. Your lawn maintenance companies, your painting companies, even those kind of people who are subject to this law, but are not policed because they're just not on the radar. I don't know, Drew, if you have any latest statistics, but only about 2.5–3% of people who have DOT numbers ever get inspected. It's a low number beyond the first requirement for the new entries.
Correct. Yep. It truly is a low number.
So that's where these aren't policed here, but that's the current policing part. So the MCS 90 is endorsement, and it's not sent anywhere. The 91 is a filing set to FMCSA if a motor carrier has that second MC number, ability to haul consumer goods in interstate commerce. It requires, that endorsement requires MCS 90 to be added to the policy. So anytime your insurance make a 91X filing, it says there's MCS 90 attached to the policy, that part of it. Drew, I knew of a program that was out west, and we won't talk about here, who would refuse to put MCS 90 without a 91X filing. And my comment when I was asked about that, it says, how often do they want to lie to the government? I also make a comment. Go ahead.
So I mean, it does seem rather odd when somebody would be willing to make the filing but not provide the cover, or to provide the cover and not make the filing.
Yeah, and my point is that that's the worst case scenario, because since the 91X filing is in place, it says MCS 90 is there, the court's going to interpret as MCS 90 there, but without it, you don't have the reimbursement provision on it. So, you know,
absolutely,
that takes, so that was things. So, and then the MCS 90 is only enforced on the inspections, MCS 90 and 91X. And this is the key part. People don't understand this. Only becomes a factor in a claim when there is no coverage in the policy. I get so many times with agents and even adjusters, Drew, that say, well, if they got MCS 90, then we got to do this or do that. No, you don't. It's only when you have no coverage involved in it. So the MCS 91X, from a claim standpoint, Drew, doesn't even get looked at until you sort out what you talked about before, the causation, and what do we have to pay and where the coverage is. And the only time these public financial or federal financial or state financial responsibility limits come in place or requirements come in place is when there is no coverage. Because when there's coverage, there's no reason to look at this stuff. And I'm sure that's
correct. And that's,
go ahead.
And that's exactly right, Tommy. That's that promise to pay, if you will, under the MCS 90, that if there's coverage there, there's no purpose for the MCS 90. It doesn't need to respond. But I think a lot of the confusion comes from the retail side, where they're not quite as familiar with the environmental transport exposures. And I can't tell you how many requests I get a week where somebody says, and I need to ensure the MCS 90 is on the policy to give them pollution coverage. And so it's a constant training for folks to recognize that is not coverage. It's a promise to pay. And we'll talk about that a little bit later. My concern is when there's an MCS 90, but there isn't pollution coverage under the coverage form.
Right. That's the gap that we have to deal with. By the way, I haven't thought of this for a long time. I know you know Doris from Canal many years ago.
Sure.
And when I first did classes for Canal, when we were doing in their office in Greenville a number of years ago, she said, Tommy, make sure you tell these agents MCS 90 does not give you hired auto coverage. So it's the same thing, because agents thought they needed that or they had that coverage if we had the MCS 90 endorsement. And that's the point here, just like you need for pollution. No, that's a part of the insurance agreement. This only protects the public. So the MCS 90 protects the public when there is no coverage in the policy. The public liability, BI and PD, is the definition of public liability, BI and PD, and environmental restoration, which is the cleanup. So you not only have the BI and PD, but also that environmental restoration. So that's the pollution cleanup. It obligates the insurance company to pay any final judgment against the insured. And this is another thing that Drew and I are going to talk about here before we're through with this session is how can you wait on the pollution loss, Drew, until it's a final judgment? I mean, that's the worst thing you can do, is it not?
Absolutely. And there have been situations where that's occurred where the insurance provider, the insurance company, was not aware of a loss until it came to judgment. That's really the only scenario that you see that happen.
And once you start paying, you're not going to be able to recover. So that's something we want to have here. But providing no coverage to the insured agrees to reimburse the company for any payment made by the company that the company will not have been obligated to make except for this endorsement. So this is the wording that you have, the MCS 90, and was going to evolve in where the coverage came from, where the government came involved, and the requirement for the minimum financial responsibility requirements, which includes pollution cleanup, but it doesn't provide the coverage. And our business as an insurance provider, an insurance agent, is to provide coverage as well as meet the financial responsibility. So coverage consideration. What's a covered auto? First, that's the two triggering coverage. And then what damage is done by pollutant. That's insured cargo addressed in the policy. Drew, you go through a lot of times worried about what's a covered auto, do you not, in that part of it here?
We do. The MCS 90 does require that the insurance policy respond, and that could be under the MCS 90 for vehicles that have a GVW, gross vehicle weight of 10,000 pounds or greater. So it's imperative as we're assessing a risk to make certain that any vehicle that is in the care, custody, control, operated, insured to, owned by, leased to, etc., are named insured that has that GVW, gross vehicle weight of 10,000 pounds or greater, is on our policy, because we'll ultimately have to respond to that event.
I agree with you on that part of it, Drew. I have this slide in here. The one thing that we had not talked about here that is a part of this is that cancellation provision, because even when you have MCS 90 in the policy, you have to give 36 days notice even for non-payment. And so that tells us about how we need to handle the financial requirements of when we deal with insured, and that is get what 25% up front, Drew, is what you want to get when you're MCS 90 on the policy, or some
ideally
like that.
Yep. Correct. And that gets back to that bond aspect, that protect the public piece, is that the whole reason we're doing that is to provide notice to the various governments to recognize that we've got coverage in force for somebody who is potentially hazardous in their operations, meaning the commodity or their actual transport of commodities. So it's interesting. We do get requests from folks, again, retailers that don't necessarily have a great background in environmental risks, or even just the basics of the MCS 90, to question the 35-day notice. A lot of people simply rely on the fact that we've got filings in place, etc., but the MCS 90 does apply with that notice requirement as well.
Even when the insured requests the cancellation, they have to give that, and that would be a midterm when they get a better price. And so that's just something you have to worry about. So agents here, when you haven't dealt with this, you got to get your money up front, or you go with some direct bill programs, which you do not have a requirement for any unearned premium, or the premium finance companies. But with even premium finance companies, they only have the same rights as the insured. So they have to give us 36 days notice. And this comes up often, not as often as it does before, Drew, but every now and then I got a better price, I want to cancel it, or they're not paying me now, can I cancel it? And that 36 days is how we handle the money. So we got to make sure all autos owned and used by the insured are covered under the policy this endorsement is attached to. Any vehicle 10,000 GVW or larger, that's no problem. The problem is how many policies you write, Drew, that are specifically described autos only.
A lot.
Yeah, it's the major, statistics, 90% of motor carriers have fewer than 20 power units. Until you get over 20 power units, you're going to be specifically described. So that's the problem here on a covered auto. If you don't have any, then you would have to have the specifically described, which would be symbol 7 or 67. We do add hired auto coverage now more often than we ever did before to meet the insured's customers' requirements. Drew, I know you've been doing this for a while, but you've heard me, and we've shared this in the advanced underwriting that you're helping us teach, is that hired auto used to be not available at all with specified autos for most carriers. But in the recent days, it is more, meaning the last 10 years, it is more available because the customers of our insureds are requiring it. And if we can't meet the customer's requirements, then we can't write the risk. And I'm sure that you provide hired auto kind of reluctantly, but freely. How do you balance those two things? You know what I'm saying? I don't mean freely, but kind of reluctantly, but you have to do it or you don't write the risk.
There's no question about it. That has become very commonplace, and it's an expectation from almost every shipper that I'm aware of that it creates that contractual requirement for the insured. So we do underwrite that exposure. There are times that we secure financials depending on the size of the risk, et cetera. But in most cases, you mentioned that, the vast majority of accounts are smaller accounts. This hired auto is, if any. Now, there are some states like California, which is unique with their sub-haul exposures, et cetera. But absent that, in the course of normal business, the hired auto exposure for a traditional trucker that we see is fairly negligible. So it's in many cases easy to underwrite on an if any basis.
Yeah, and
it's auditable as well.
Yeah, it's very auditable. I was actually a couple audits and had nothing to do with pollution involving a mixed brokerage and not with additional premium. In New England one time it was $1,400,000, which kind of got everybody upset and got me involved in it. But anyway, as you would imagine. But you're right, and we monitor by the inspections. But my point here is today, with even specified hired auto, there are very few chances where the loss was caused by a vehicle that wasn't a covered auto. The real problem you have to determine coverage is the pollution, because we'll talk in a few minutes about what's excluded or not, and that's the CA 9948 endorsement on the policy. There are a couple carriers. The only one I really know is Great West Casualty, who's modified their form to provide pollution coverage in its form itself. Everybody else adds either the 9948 endorsement or the proprietary endorsement. And some of them, all your programs, Drew, automatically within the price you quote contains the CA 9948 buyback. Is that correct?
We have capabilities to recognize that premium within the auto liability, so it's built into that, or we also have the capability to recognize it as a standalone coverage. There are some scenarios where the CA 9948 may not be the best solution for the overall operation of the risk. So there's times that we'll find a standalone environmental transport policy with perhaps a combined CGL, et cetera. So to answer your question directly, it can be built in within the policy, or it can be separated on an a la carte basis.
But every risk you write, you make sure it's done one way or the other.
Correct. It's prudent of us as underwriters to ensure that folks are aware of that exposure and that it's addressed. And we have gone so far with our retail agents and even with prospects and insureds, if they do not want the CA 9948, to have them provide notice to us in writing on letterhead executed by an officer of the motor carrier. And we do the same with the retail agent to confirm that all folks are aware our policy is not providing that cover, even though it's necessary for their overall exposures.
And this protects them in case they don't do it to seek reimbursement, because my concern, Drew, on the reimbursement part is that if you don't offer the coverage, how can you ever seek reimbursement when you know they got the exposure? And so Drew,
and after the loss, everybody has a different memory.
Right. Well, yeah, absolutely. And after the loss, they always will buy the coverage. That's always been that. Talked about, this is your stuff now. Tell me about these next few slides and this define the hazard material and this kind of stuff. So this is your bailiwick, Drew.
Perfect. Well, hazardous materials, the FMCSA, the Federal Motor Carrier Safety Administration, they do define what we recognize as various hazardous materials. Those can be substances, waste, pollutants, etc. It's recognized that there's an elevated temperature material. There are some commodities that aren't necessarily hazardous in and of themselves, but they create an exposure for heat and even cold, believe it or not, for some of those commodities. So that is a controlled substance, if you will. We don't define them, the FMCSA does. And there are many good resources out there that walk through what these specific commodities are. And these will go a little bit further for us in identifying those limits that may be required by the FMCSA that are specific to the commodity haul.
And we hear this. Go ahead. I'm sorry, Drew. I'm sorry.
No, correct. Yep. As we get into these definitions of hazardous substances, et cetera, they do identify these more specifically by class. And you'll note that there are 9 classes available for various transportable hazmat commodities, class 1 through 9, with various subcategories within those that may be based on packing group, maybe based on if that commodity is liquid versus gaseous versus solid, et cetera. And again, this will help us identify what limits are required by the FMCSA.
And there's also some extra training for these hazards, is there not?
There is. The dirty secret that's not a dirty secret is we tend to find that this class of business includes better than average equipment, better than average management, better than average drivers, and overall just better than average risks. And part of that's because they do have an extra level of scrutiny, if you will, and requirement. They have to have a hazmat endorsement. That goes through some various compliance training. They must have security measures in place. So there are a number of additional things they're required to comply with in order to maintain their hazmat authority as a carrier and their hazmat endorsement as a driver. It's important as we walk through anything that's environmental. The one thing I want to be clear on is that there's hazardous materials, but the broader exposure is environmental, because not everything that is environmental is hazmat. For example, wastewater, used oil, things along those lines, even though if that product is released, depending on where it's released, could require some response or cleanup. So it's imperative that folks are trained, they understand their policies. We spoke a moment ago. We want to make certain that they're aware that they do need a CA 9948 or 9948-like cover if they have the MCF 90 out there. We want to make certain that they have the capabilities to respond in an event. It's important that depending on what the risks operations are, if they're local or if they're long haul, that they've got an appropriate network of folks that can respond on their behalf in the event of a loss. And we can talk about that with respect to the bottom item on here, the cost management piece. The response, the initial response is where the costs start. And it's a lot different if we have a representative for ourselves, the insurance provider, or for the motor carrier assisting in the directing of that response versus Billy Joe Bob out in the middle of the sticks getting his brother-in-law and all their cronies to come out with a ton of dump trucks and tow trucks and everything else to sit on a shovel here and start to rack up charges. So we really want to control that conversation.
In the white suits and masks, but I always use the same example. That it's the local police's brother-in-law who gets called out this, and now they have a carte blanche bill they can charge everything to, and how do you dispute that later when the government's telling you got to do it? That's the thing. We see these placards on the side of the truck. Tell us about the placards, and we'll got pictures of them here in a few minutes, but tell us about what those mean, Drew, and how important those are.
It's most important to the people that are responding in that event, because some things require dilution with water, some things will be exacerbated if there's water applied to it versus foam, but it gives those first responders an idea of what that commodity is. That the placard, coupled with the bill of lading and the safety data sheet that we'll talk about in a minute as well, instructs the first responders on how to respond in that event. And recognizing that each individual commodity will have a specific placard based on some various provisions, and those are a long laundry list that our insurers are responsible to understand. But there are some shortcuts, if you will, as well. When you start talking about hauling multiple commodities that may be a little bit different in nature, there is one overriding placard, which is the dangerous placard, and that just puts the first responder on high alert to say, hey, there's more than one commodity here. And in many cases, those mixtures of commodities can create even a bigger problem. So it's important to put that information on the side of the vehicle, on the rear of the vehicle as required by FMCSA, and make certain that it is correct. It's got to be legible, it's got to be secure, and it's got to be accurate. We do occasionally find where the wrong placard is reflected, a placard has fallen off just based on maintenance, etc. So this is something that we encourage every one of our insureds and prospective insureds to include as part of their pre-trip and post-trip inspection process.
And I also point out that sometimes if you get the citation for not being proper placard, you can get the same citation if you show something that's in the trailer and the trailer's empty as you can with hauling something required a placard and don't put that on. So it goes both ways, does it not? Again, so the officer can know how to respond.
Absolutely, it does. And that you're exactly right. They may bring out resources to respond to an event that is really not an event because something was misplacarded or placarded when it didn't deserve one.
You mentioned MCSDS. This is the way I understand this, and I've been involved in this later on with some other thing. This is required by anybody who has anything to manufacture to give it to whoever is hauling it or whoever is buying it to talk about the nature of it, the damage can be done, and also the antidote for the consuming of it, or the you mentioned water or foam or whatever. So this is an important part.
The material safety data sheet, which is now abbreviated to a safety data sheet, we're new and improved with our jargon. It is provided by the shipper to the motor carrier to recognize the product, to recognize the classification, the UN number, which isn't something we've spoken about, but that really identifies the universal number, identifies what that commodity is, that helps us correctly placard and recognize what that class of commodity is. It also includes a lot of information relative to the chemical makeup of the product. And as Tommy mentioned, the most important thing is recognizing how first responders will remediate or respond to that product if it is released. So there's a lot of scientific information in there that I don't recall from my first day in chemistry class, but there's a lot of good information, not just to the first responders, but also to the hazmat hauler, so they recognize what they're dealing with. And this is information that is required to be in the cab with the driver when that product is being transported.
And that's the important part. And this gets back to driver training, because when you deal with these kind of commodities, that driver has to understand how to read those things. Even though they're not chemical graduates, at least they know how they have to have it there and how to handle it, and how to be, how to know when something happens. So that becomes a real important part of it, Drew, that here. So we talked about the placard and this, and we talk about the limit, but and we talk about having them be done. But there's always been a question to me, and what limit needs to be done? Because if insured has MCH 90, they must have a 91X filing with the limits found in the licensed insurance, and that'll show limits required. Who determines what limits are required for the MCH 90? When you look at the 150 form that they have to fill out, it's section 25. And Drew, this is section 25. Who in the world as a motor carrier knows what to check here?
Well, hopefully they do, based on the class of commodities they haul, based on how they haul them and who they are, et cetera. But yes, it can be very confusing. We do find situations where the MCS 150 does need some tweaks and changes, et cetera, along the way, where folks have misclassified things, et cetera. But this is extremely necessary in determining if the risk is a $1 million hazmat hauler, or as some people think that every hazmat hauler is a $5 million, a $5 million hazmat hauler.
Or
there are very few commodities.
Or even if they need 750. I mean,
correct, exactly.
Because and the point here is where they get this is off the 150. Some computer or some person in the sky determines this. So it depends on how the insured fills it out. For example, my son-in-law, who's a private hauler, had to be involved and get a DOT number, and he filled the form out, and he was hauling building material. But I do know that he has a trailer with a skid loader on it, and I do know once or twice a month that skid loader moves across state lines, that he technically needs $1 million. But he didn't make a mistake. He just didn't know how to fill it out. And so I was just the pointing here, that limit shown at required by the government that the 91X has is this mechanical. It depends on what the insured fills out. It depends on how sophisticated the insured is and fills out who reads it. And how often you see an error on that part, because it doesn't get policed until they get that on-site inspection.
I would say we see one probably once every couple of weeks. So part of the policing, if you will, not to catch somebody doing something wrong, but to ensure they're properly certificated, we do that as part of the underwriting process as well. And that's why it's so imperative to use the tools that are available. There are times we ask for a copy to file of MCS 150. we do ask for confirmation of the commodities hauled. We want the insured to be well aware of what they're doing, just so we can properly provide them with the alternative coverage necessary to cover their exposures.
So the on-site inspection does that. And concern, typically the insured provider only shows the limits required, the 750. So inspection time, if there's higher limit requirement, they could be subject to a fine. And that's why a good hazmat provider like yourselves try to save that fine and go ahead and meet the requirement, even though the limit's not shown that, just to be careful of that. Correct?
Absolutely. That's part of the underwriting process, Tommy.
Yeah, and the change in the limit. So again, the 9179 does not become a part of the claim until something happens. Drew, we've got a little time here, but just going to give you an example, and then you can talk about this. The truck drives down the highway, 55-gallon drums of oil. One drum falls off, lands on a car behind it. The truck breaks the windshield, glass cuts the drivers and passengers. Drum comes off, and oil gets in the driver's eyes and burns their skin. Driver, the car loses control, hits a tree. Smashes the front of the car. The gas from the car escapes and gets on the grass and into the creek. The drums of oil that hit the car contain spill on the ground, killing the grass and getting to the creek. When the drum falls off the truck becomes unbalanced and turns over. The diesel fuel from the truck escapes and also gets on the grass in the creek, as well as two more drums, tops come off, contains it gets the grass into the creek. Is that a typical claim?
Well, first and foremost, with my old training as a former claims adjuster, I can't answer a hypothetical question.
but my point is moving part. But let's talk about this crash.
Sure.
When does the EPA have to be notified?
They need to be notified immediately. So as soon as practical, I believe is the actual language used. They need to be advised of the location, the time, the assumed or known amount of product, what the product was, and in many cases they're going to ask for a description of what that area looks like. You know, is there a drain nearby? Is there an open water source? Those types of things. So it is something that has to be done as soon as practical, and there are time elements on that. That's why it's so important for these motor carriers who are in the practice of hauling these commodities do have a relationship with a consultant, a responder, a company that lives in this space every day, so they can assist this insured in making the proper reports and providing the proper information, because as soon as that loss occurs, the insured is on the clock.
And I understand it's any spill over, 75 gallons?
Correct.
So that, and the other thing we have to, even though the crash was caused by somebody else, meaning our insured in this got run into and caused it to escape, or somebody ran into the fuel tank, caused it to escape. If it's over 75 gallons, they have to not only report it, they're absolutely responsible for it, because as I understand the law, the last entity, person with pollution before the incident escaped, must address the cleanup, even if the insured did not cause the release. That presents a problem sometimes too, because obviously you can subrogate back against somebody else who caused it, but how often is that going to help you? I don't mean about the motor carrier for not having the right coverage. I'm talking about whoever caused it.
Exactly. But I think the key component here is, Tommy, we on the insurance side would prefer to control that investigation. So it makes sense to get the more expert folks involved rather than have some personal auto insurer trying to respond to a hazmat event because their driver was actually at fault for the loss. So I think in the long term, we're probably ultimately saving dollars, even though there are occasions we can't subrogate or seek reimbursement. But I think we do ultimately save dollars as an industry in the hazmat world by controlling that responsibility for the cleanup.
Because this is what Drew's talking about the cleanup here. At site here, who authorizes it? The driver authorizes, who has to pay? Well, when the driver authorizes it, the company's obligated to pay, and then the insurance carrier pays, and then they can seek subrogation back if there's, with the coverage, what they have to pay from the at-fault party or not. If it's not paid, that goes back to the judgment, and that's what the situation that you don't want, because that's just going to get worse. And so this is the part here that the motor carrier do the driver sign it, or just assume they're assuming the liability when all those people in the white suits come out?
Yep. In many cases now, with the advent of telephones and all of that, and I say like that like I'm an old guy, but years ago when you had to go to a payphone to make the call to your dispatcher or what have you, it became very difficult, and you had a lot of drivers that would panic. And so next thing you know, you had a huge bill that was just loosely related to the event. However, with where we are today, most drivers are very well educated about how to direct response teams to their superiors, if you will, for lack of a better term, so that authorization can be provided. But in many cases, most of these folks do have a third party that assists the motor carrier, and those folks will work in tandem with the insured to be certain that they're authorizing the proper type of response, that they're mitigating that loss, making sure that all the brother-in-laws aren't out there, or if they are out there, they're actually doing the appropriate work. And one of the other big things is just simply with equipment. We see this on the tow side as well. You get a number of pieces of equipment dispatched to respond, and you're paying for that idle time. So it's not uncommon for photos to be used at a later time to recognize what equipment was there and what it was actually doing. So having somebody who's a professional who does this all the time, which is typically not our driver because we don't want them having losses, it's good to have that person out there who knows what they're doing and can speak the jargon and then can control the scene.
And the bottom line is, if you're not that proactive and you have an MCS 90, you're going to end up paying anyway once the judgment is rendered. And so you're better off to control it here. Drew, in that example I gave you, there are three areas that pollution comes from. The property, that's the cargo and insurance care cost control. In that example we got, those are the 55-gallon drums. The property used for the service of the vehicle, the fluids to make it go. We're not talking about our insured vehicle. That would be the diesel fuel in the tank. And then this third-party property our insured calls to escape, and that's the gas in the car they have. So those are the three places a pollutant can come from. The items that's typically in your insured care cost control, and that's the cargo, diesel fuel. I guess you could have oil in the engine, hydraulics, things like that. And then when our insured runs into somebody else. So when we look at the coverage here, we have the definition of pollutant, and I define it, Drew, anything that's yucky. But it's anything that can change the environment. That's the thing that we think about here. Anything that can do some danger to the environment. So it lists these kind of things. And then our policy says, we talked about the insurance agreement earlier, if the cargo caused it, there's no coverage. That's the direct damage. That's exclusion 9. The definition of pollution, cost, and expense says if the cargo caused it, there's no coverage. Drew, where's the most pollutant our insurance going to have? Their cargo, right? So the policy take away the coverage from the area where the pollutants are. This is why we're here. So there's limited coverage in the current ISO policy. No coverage for pollution caused by insurance cargo. Some insurance companies give protection from pollution all the time, including the coverage wording. Again, Great West Casualty. Some of them add the endorsement we talk about, CA 9948, which then will cover you for the full limits. Some of these endorsements do not provide the full limits and don't cover all pollutant. You need to look at this because some of those numbers can be different. I do know of an insurance company who offers it, but only offers 100,000. Drew, I'm saying that's like being a little pregnant. You either all or nothing on this thing here. Why just limit it to that part of it? And some of them define,
absolutely.
If some of them define certain commodities, well, what happens if not hauling commodity? And again, we already talked about is it including the quote or not, or additional premium. My comment to the agents are you need to find out, no matter who you write, how your insurers are going to handle pollutant. And is it covered by cargo, and want to have the broadest coverage possible, or as you say, have an alternative to it. Some states, you realize, mandate full coverage. That's Virginia, New York, and Vermont. Those proprietary endorsements give the full limit pollution coverage. So again, it's coverage. The coverage is available either one way or the other, either by an insurance company who does it or by a standalone. It's the question of cost, and sometimes it's not that. It sometimes saves the insurance carrier money by doing it right. It's the insurance decision. So agents, you want to discuss this up front before it happens. So you add the 9948 endorsement. That adds the broad coverage. That's been always included again in the coverage here. And some companies add it and have a different wording in it here. So you got to ask every carrier you do business with, writing motor carriers, how they approach pollution. It's available. It's a question of cost. This should be the insurance option, not you as the agent's option. No coverage of standardized policies for pollution. How successful will subrogation ever be, Drew?
In the multiple times we've had events where this has come into play, I think once we were able to recover some monies. So the issue is it really needs to be addressed as the underwriting process because the chances of recovery are very, very minimal.
And even and this part of it's only judgment time, and if you start paying some to clean up before that, then you're not going to be able to cover that anyway. So that's going to be how you handle it, and you just can't sit there and let it fester. And that's the part here, and encourage everybody to do it. This is CA 9948 buyback endorsement. I know you can't read it. I just remind you that there are a few insurance companies that have their proprietary endorsement. Just compare this. What you want to find out is that you want to have the full limits coverage whenever possible for everybody who has who hauls anything and has MCS 90 involved on the policy. And the difference is, again, MCS 90 versus the 91X buyback. You want to have the limits in the policy. You don't want to have it covers any pollution others. Drew, talk for a couple of minutes we got left here about that standalone pollution policies. I find that most times this will happen when your insured has a location with potential pollution exposure, or even not a potential one. If they have a garage or a fueling facility or a cleanout bay, you might opt out buying, as you said, a GL on the location to buy a standalone. And that standalone, you can add pollution transportation fairly cheaply to a standalone policy. Just contrast the MCS 90 and CA 9948 and that standalone for a second.
Sure, and you're exactly right. That's where we tend to see it the most, is when you've got a site exposure. It could be a garage, but more than likely it tends to be a large tank for a maybe a mid-sized motor carrier that's trying to mitigate some of their fuel expenses. We also see it with contractors, folks that do some other things under the GL broader or more intense than just trucking. And so they've got a much greater pollution exposure. So to your point, the GL pollution exposure is much greater. And in many cases, those environmental underwriters will simply put the TPL, the Transportation Pollution Liability Policy, as a tag along on that bigger GL exposure for a minimal premium. And not that we're charging significant monies on our end, but it makes sense in many cases to have that all in one. So the event of a loss, that one company is going to respond, because there are times when you do see the TPL and the GL kind of cross swords, if you will.
And do they share those losses, or they pay, or which? How would that work out, Drew? If you had the 91, the CA 9940 and that standalone, how is that? The insurance companies work those things out and kind of prorate it, or stack?
They do, but the best scenario is to only have one or the other covered. Okay. So we try to do our due diligence. If we know somebody's going to have a TPL policy elsewhere, we do not want to afford the CA 9948, but that does create a question when you start putting the MCS 90 out there. There's some additional responsibilities on us to make certain that that other coverage is maintained. So there are some other things out there that you have to be attentive to, and it's not the perfect scenario, but I would just encourage folks to recognize when that does occur, make sure you're talking with experts that understand the nuances of that, just so that you are protected from an E&O and also the insured's protected from proper coverage.
And remember, if you're an insurance provider, if you have MCS 90, you're going to end up addressing this claim sooner or later, one way or the other, with or without coverage.
Absolutely.
So, and you're not going to have a chance of subrogation. So agents, insurance provider must meet the requirement, the 91X MCS 90 holder, you must have MCS 90 on the policy. Is limit required, this limit and the limits required to operate. MCS 90, all DOT holders for hire and private might have to have it and not be fined. So this is the underlying thing, and one of our number one requirements, Drew, is to meet the government, to make them legal, and this is the process here arising out of the pollution. So this is a lot of moving parts here, and we hope these minutes we spent together will give you a better understanding of how to address this and take some of the myths out of the marketplace. Real quick, Drew, any following closing comments?
Well, the most common question we get is what limits are required, and I would encourage folks to use page 2 of the MCS 90 as a great reference tool. It's a starting place to recognize, based on what the insured's hauling, we talk about classes of commodity, it's going to define the required limits based on classes for the 750, the 1 mil, or the 5 mil. So that's a great reference tool for folks to have handy.
And if you've got an underwriter who doesn't or insured does not understand what those things are, you might ask them, have you looked at them, the data sheets, material data sheets, and underwriters who don't know is a real problem. That's the concern. This area comes up often, Drew, and I really appreciate you sharing your knowledge and your expertise, and not only this program, but being available for our members to contact you later if they have any questions. With that, we hope you got something out of this, and we look forward to you using information provided on these other webinars. Thanks, Drew.
You're welcome, Tommy. Thanks.